every month that I've been doing these over the past few months, especially, it feels like we get closer and closer to this razor's edge where we really don't know what's going to happen, if anything's going to change, or why it may or may not defy expectations again. Now, the month of August is going to be a little bit surprising. And what I'm seeing so far in September will also open your eyes a little bit. So make sure you tune into the end of this one. We're going to dive deep on what happened in the month of August, take a little context from what we've seen here in the first week of September, and project forward for what we can expect here in the Ocean City market. So if this is the first market update you've seen with me, we start with what has happened recently as well as further in the past, go into some visualizations and graphics about what has happened, bring some context to it so that we can then project what is most likely to happen. Again, I don't have a crystal ball, but we can use data to inform our educated guesses so that you can make a better decision on whether you're buying or selling. So mortgage rates have been all over the place, and they continue to be very erratic, even on a daily basis. So we have seen them start to creep up over 7. They're pretty solidly over 7 at the moment for a 30-year conventional, to the point where a lot of lenders, a lot of buyers are really considering and relying on adjustable rate mortgages going forward to save them a half a point, 3/4 of a point, whatever the case is. It's going to save some money. And the hope and the thought is that within the next 5 to 7 years, rates should probably come down. A refinance feels kind of safe. I'm not necessarily recommending that you do that. Everybody has their own decision to make. I'm personally going through the buying process right now and the decision-making process of how I want to handle this, given all of the context and things that are happening. So if you ever want to talk about where I'm at, if you want to see a series of where my head's at, how I'm making my choices, just let me know. Drop something down in the comments. I would love to meet that need if there is one. Inventory wise, an increase is a rarity. We haven't seen that in a while. And even from going up 2% from July to August, so far in September, we're up nearly another 5% already. Now, you may hear those numbers and go, wow, it's skyrocketing, right? The inventory is finally coming. I still don't think that's necessarily the case. We usually see an inventory increase in September. And when I say a 5% increase, it may sound substantial. We're talking about 11, 12 properties. That's not a huge deal, right? That's not going to satisfy all the buyer demand and needs to the point where it's going to have a real impact on anything. So it's a good sign if you're looking to buy. If you're looking to sell, you may have a little bit more competition, or you may still be, the only one in town, the only game in town. But it's something to track. Normally, again, we see inventory peak from a yearly standpoint in late September, early October before it starts to dip again throughout the fall. So that's something I'm obviously going to keep a very close eye on. Days on market are still inching upwards a little bit. Prices, we saw a very maybe shocking change in terms of prices, specifically for single family homes. As you can see here, down 2% year over year, meaning the same time last year, we've now dropped 2%. While condos are still rising. We'll look at the visuals. We'll dig in a little bit on that here in a second, but I want to start with new listings. We finally saw an increase in new listings after 3 months of lower and lower new listings compared to the month prior. We have an increase in August, which is a good thing. So again, that helps us to understand, hey, look, if we actually saw an increase in the overall inventory, which we did, right, 2%, is that likely a cause of we actually had more inventory come onto the market, or is it that demand has slowed down, right? That we had our normal amount of inventory and demand has just dropped. Two totally different things. Here would be the case, I would say, that it's due to more inventory coming on the market, which is, again, a pro. Now, pending sales. I got really stuck on this just about 20 minutes ago while I was putting this together and finalizing it, because I noticed something. Normally, I look for, all right, year over year, or even like 12 months ago versus the most recent 12 months, how much have things changed, right? How are we looking from an overall sales standpoint year over year? And it's trending so far at about a 30% reduction in total sales, closed sales. We've been seeing that number for the past about 9 months. So it's pretty significant. But what I noticed just looking at this chart, right? We see, and I'm not going to go month by month here with you. You can certainly pause and do that if you want. But if we go back to January, right, January of 2022 versus January 2023, we start seeing that in 2023, we had fewer homes going under contract. That trend continues all the way through May. Every month, we had less and less go under contract compared to the year prior, I should say. The key here is looking at June, July, and August, where normally we don't necessarily see a ton of activity. August can be a spike month as people, prepare for the fall. But we've had 3 months in a row where we have trended well above what we saw last year. So this flies in the face of the narratives that are out there, um, of everything slowing down, right? Everything's about to break. Mortgage rates are too high. If they're too high, why do we have more homes going under contract than we did last year? And admittedly, this time last year, rates were about the same. They were high sixes, low sevens. So while last year that resulted in a bit of a slump, this year it's somehow not impacting things to the point where we actually have an increase over what we've seen over the past few months when rates were a little bit lower. So that to me, again, is indicative that this market is stable. It's strong and it's solid. From a closed sales standpoint, again, we had an increase from last month, a pretty substantial one. Again, this is more of a lagging metric. I don't read too much into that. I focus more on the pendings because that's indicative of what is going to close and sell in the coming months. So months of inventory. This single family world has been crazy, as you can see over the past year. We went flying through all the way up to 9 months of inventory. We're back down to 5. We've been coming down pretty heavily the last few months because a lot of homes have gone under contract in the single family space. And that is despite the prices that are out there. So again, how does this play into the fact that prices are down 2% from the same time last year? We'll get into that in a second. So again, over the past year, give or take, we've been roughly flat. Now we have the last 2 months really taken a little bit of a dip. And this is not a monumental dip, but it is a dip. I'm not going to act like it's not. I expect that we will fluctuate between, I would say, 1.5 and 1.6 million over the coming months. And that may be where we stick. The super high end, $3+ million single families, they're harder to move. They're harder for people to afford at the current rates. So they're sitting a little bit longer. And those were the ones that used to skew the median price way up there. So I anticipate that we're going to stay around where we are now. We may see a couple percentage points down, a couple up. But again, I think it's a solid market. And if we go back here again to months inventory, anything under 6 months is a seller's market. Technically 5 to 6 months is a balanced market. So we're right teetering on that edge where we're about balanced. So days on market, again, we're starting to see it flatten out, maybe increase a little bit, but we're going back to where we were when we once had a balanced market in 2021, 2020. Even though volume was crazy, right? Again, from a metric standpoint, 60, 65 days on market for single family is about normal. We're almost there again. Months of inventory of condos. Again, this is still very strong. We have not touched 5 months of inventory. We came close in May, but still very much a seller's market in that world. And prices continue to inch up consistently month over month. Yes, we had one blip here and there over the past few years, but generally speaking, this is heading in a pretty consistently upward direction. Days on market is increasing, but nowhere near where we were over the past couple of years. So still very strong there. So one thing that I really want to hit on, not just the mortgage rates, but really from a mentality of the things I'm starting to see. There are a couple things that are normal. Some people who want to buy, if they don't get in for the summer, right? If you miss the boat, then I have plenty of time until March, right? I'm going to take my time. I'm going to scrutinize and look at every property. I may even take a break. Totally fine, healthy thing to do. We're heading into a very unknown period, and I know we've been in a similar unknown period. But the fact that demand is what it is in the face of these interest rates is very, I'm not going to call it alarming, but it's surprising. I would have thought that if we stayed much above 6%, we would have seen demand fall. Simply not the case. I've worked with several cash buyers. I've worked with several people who need a mortgage recently, and they've accepted the reality of this is the cost of doing what it is that they want to do for them and their families. So whether rates continue to go up, whether the Fed increases them again in 2023, as they were expected to do, again, all of their verbiage is basically, hey, look, we're not going to back down. We need to get inflation under control. If they continue to raise that prime rate, in all likelihood, that will result or eventually result in a slightly higher mortgage rate. They're not correlated. It's not an action on one does an action to the other, but they tend to move in similar directions. So more remains to be seen on that. But even talking to lenders recently, nobody knows. They've bounced, 0.1% within a day over the past couple of weeks, at times up or down. So it's very erratic right now. Inventory wise, again, we normally see an increase in August, and we did. So there's nothing to write home about there. It's something that it's better than a decrease, right? A 2% increase is not anything too substantial, but it's better than a decrease. So with homes going under contract, and this is actually an old, before I refreshed them today, so there was not a decrease in homes going under contract. It was identical. We had 56 homes go under contract in July, that 56 contract or go under contract in August as well. So if it's picking up steam throughout the summer, again, we don't know what the fall is going to bring. But so far in September, we're not seeing necessarily a slowdown. Homes are still going under contract in the first week. And what happens by the end of the month remains to be seen. But inventory is something, again, if it increases again in September, that's nothing new. That's nothing to get too excited about. It's normal. It's what usually happens in a balanced market here in our history in the Ocean City market. So price wise, again, I think that from a charting standpoint, again, we're not going to see the last increase or the last decrease, I should say, in the single family space. Based on what I'm seeing, based on how the stats are tracked, I anticipate another drop in September that's going to get us closer to that 1.5 range. So again, in real time, does that mean that home prices are all of a sudden dropping on single families? They most certainly aren't. Even the new construction world that I've been keeping a very close eye on, thinking that we're going to see some deals and discounts. There were a couple developers that provided some incentives in the amount of about 25 to 50,000, depending on the property. Those homes sold very quickly once those incentives were rolled out there. So I really don't anticipate there being a huge discount anytime soon. Single family, the inventory is still very, very low. And then as you saw, right, we're down to 5 months of inventory. So price wise, I do anticipate condos to continue to creeping up. Yes. My favorite time of the year, November, December, is coming up quickly, where you typically can find the best values of any time that you're going to buy. So I would encourage you to pay extra close attention in the run up to that. If you have questions, if you're thinking about it, give me a call, reach out, because I can help you get the filter right of what sort of properties to look for to identify ones that may have motivation, so that we can be smart and you can be smart about not just your time, but your emotional capital and your mental capital. That's something you don't want to drain chasing things that aren't going to go anywhere. And I don't really have a metaphor for that, but just don't waste your energy. Don't waste your time. I can help you shortcut all of that. So if you're looking to get into Ocean City in the coming months, even if that's the spring, reach out. It's worth a conversation now so that you know what to look for in case there is a good value to be had in the next couple months. So days on market, again, I don't think that they're going to change drastically in either direction. I think we're getting back to a normal, stable market in both worlds. So with that said, my parting thought for you, if you have any questions, obviously reach out here. But my parting thought is this is a very difficult market to navigate, whether you are looking to buy for the first time, whether you are looking to upgrade, right? Sell your current place, buy a new one. Timing is very screwy right now. There are still developers who are very active in securing properties because they don't believe that things are going to come crumbling down like some do. So competition can still be there. And it can be a little bit frustrating. Again, I have clients, maybe you're one of them watching this, right, who are looking to upgrade, and that mortgage rate difference between what you have and what you would now have on your new property is just prohibitive to the point where it doesn't make any sense. The frustration builds up of when's it going to change? When can I make that move? So those conversations are hard to have, whether that's between, spouses, family, whomever, partners, let alone if you bring here another agent into the picture to kind of play marriage counselor in a way. It's very hard because we can only change so much, right? We can only inform you to a certain extent, and then the decision is yours, right? The tolerance that you have for a higher payment, for whatever is holding you back, we can help you understand what the fact is and what the reality is. We can't make the decision for you. So again, the sooner you start to educate yourself about this whole process, about the realities of the market, the more ready you're going to be when that opportunity does come, if it comes. And again, nobody needs to buy or sell here for the most part. This is a very unique market compared to the markets that the headlines are typically about, right? That is the freeze coming, is the crash coming. I think that's all nonsense. So we'll see what happens over the course of September. I'm definitely going to do a mid-month market update, and you don't want to miss that because it'll give us a look ahead into, hey, look, here's how we're trending compared to what we would have expected based off history, right? The balanced markets in the past, here's what we saw in September. here's what we are likely to see by the time this month ends based off of what we've seen so far. So if you want to see that, make sure you subscribe down below if you haven't already, because I bring these videos each and every week. Every once in a while, I get too caught up and busy. I can't quite get to it. That was the last 2 weeks, and I apologize for that, but I'm going to keep it coming. If you have questions, you know how to find me. Feel free to comment below if you have questions that you think the world may also have, or other local residents or future local residents may be considering. So thanks as always for hanging out with me. I'm going to get back to my vacation. Stuttered a whole lot more than I normally do through these videos because my brain is in a million places right now. So thanks for tolerating it. I'll see you around.